Welcome back. You're watching The Money Show. It's time to answer all your portfolio queries. And Shweta Jain, our guest, has joined us live. We'll be answering your questions. Shweta, hi, good evening. Welcome to the show. Let's take Vijay Kumar Kanya's question. He's 48 years old, investing 9,000 per month across 5 mutual fund, and investment horizon is almost 10 years. And he wants to know how much corpus can he expect and any other changes that you might want to recommend. I think you already have the name of the funds. All right, so what's the advice?
So he is investing about the portfolio will be, I think, about 22 lakhs is what his expectation could be, depending on the returns. The portfolio is looking good, but he might want to increase the allocation to large cap though. So if that is his goal, that's something that he should do. But otherwise, the amounts, if you see small cap, he's investing a little more in one particular scheme. It could get one lopsided after some time. So he should make sure that he's reviewing the portfolio, not just in terms of schemes, but in terms of allocation as well.
All right. Let's take the other question. This is from Kunj Mohan Chaudhary, and he's investing 40,000 per month through SIPs. Wants to know if the funds are good or not, and he is not sure to on exiting the funds that are giving him negative returns. So, all right. Yeah. So two funds almost are giving him negative returns. I do not have the name of the funds though with me, but yeah. How can you actually plan an exit from a fund?
Okay, it's an interesting question. It would have been more interesting if we had the scheme names as well. But so usually we don't just exit schemes if there are negative returns. You have to make a comparison with whether it's the index, with whether it is with comparative schemes in the same category. Also, if there's been any management change, any fund management change, what kind of risks the fund is taking, what kind of portfolio turnover is there, why is the fund giving negative returns, is there some kind of explanation to that? If there is no explanation, and if things are not going, just that this scheme is not doing well, everything else in the category is doing well, then it may be a definite time to relook and exit. But otherwise we don't really exit every year, 2 years. When you're looking at mutual funds and equity especially, 5 years is something that you want to target, but 3 years is something that you want to stay invested, provided things are going okay.
A year, I'm not sure since how long he's invested, but I think there has been a constant underperformance since last 2 to 3 years. So that is what he's saying, that after 2 to 3 years he's realizing that 5 to 6 funds are underperforming, are in negative. So how much time should you ideally give then?
No, so the time he is actually considering is fine. 3 years is
Okay.
fine if that's something that he's seeing. But he has to also compare to the category where he's investing. Say, we don't know the category. So, say if it's a thematic fund and that particular theme itself has done negative in the last 3 years, thematic by nature, you need to get both entry and exit right, the higher in terms of risk. So, he may have to stay invested for a longer period if it's a theme issue. But if it's just the scheme issue, then he may have to exit right away. So that's why I said if he knew more about the schemes, we could have given better advice to him as well.
Let's move on to the other question. This is from Arun Yadav, and he wants to invest 40 lakhs and he's planning to generate income through SWP for 20 years from now. And for that, he needs a suitable portfolio mix or a fund mix. Okay, so I don't know if he really needs this money like immediately after investing, or maybe he wants to give some time for the money to stay invested and maybe grow. In both the scenarios, what would you recommend?
So I would ideally recommend a combination of aggressive and conservative schemes, because we don't really know what kind of time horizon he has, what kind of money he wants to withdraw. For example, if it's 2%, if it's 5%, what kind of money would he like to withdraw? If it's today withdrawal or if it's after 10 years. So lots of variables there. So it could actually work out to a much larger chart than just say, you can withdraw 5,000 X amount of years. You will also have to account for inflation over the years. So I would recommend take a one scheme, which is say like a Bandhan aggressive hybrid scheme, and one maybe like a Kotak conservative scheme, like a debt conservative scheme. So there you are kind of averaging out your portfolio. You're kind of making sure that while you're targeting income, you're also focusing on growth. Both are happening to your portfolio. It could mean that one particular scheme has more allocation and the other less, depending on when he wants to withdraw, when he wants to sort of start his withdrawal immediately or after a few years. He could withdraw from capital itself if he needs immediately, because that's what will happen in case he wants to start the SWP immediately. But if it is after a few years, it could mean that he's only withdrawing the interest income. Also, how flexible is, how much of this is part of your overall portfolio? Is this your only portfolio? Is there PPFs? Is there senior citizen schemes? What are giving you monthly incomes? Are those scalable? Will those beat inflation on a later day? So a lot of retirement planning questions there. So when you plan SWP, make sure you're taking into account the holistic picture.
All right, let's just take one more last question. This is from Surinder Arora, and he's investing in Aditya Birla Credit Risk Fund and wants to know whether to continue or to shift to a short-term, medium-term debt fund.
Okay, so my question to him would be, why did he choose the scheme in the beginning? When did he invest? What is the purpose now? Does he need the money now? Why does he want to exit now? If he doesn't need the money, is it available for maybe in the next 6 months, 2 years, 5 years? Can he take more risk? So I think he needs to answer a lot of these questions for me to give him better answers. But otherwise, he can exit the scheme. He can put it in a liquid fund or a short term debt fund and then decide if he's not sure on what to do. He can exit and he can take a call later as well.
You need to have a higher risk appetite for credit risk fund.
He does need to have a higher risk appetite, which is why I said if he's absolutely not sure, then the best option for him is to exit and put it in a short-term debt fund, because then at least there's no sort of risk there in terms of any volatility or negative returns.
Right. I think with that, we are timed up on the show also. Thank you so much, Shweta, for taking your time out and answering all the questions today. Thank you. And for our viewers, I'm going to leave you with our QR code that you can scan and keep sending us your questions. Thank you so much for watching. Goodbye.